we have just a very high conviction that Bitcoin is, digital real estate, the way Michael's talked about it. We really buy into that. So we want to own a lot of digital real estate. And we think it's really important to do that now because Bitcoin, we believe, is incredibly undervalued relative to gold, and it's worth more than gold, we believe. So we should be aggressively purchasing Bitcoin on that thesis.
Welcome to the Bitcoin for Corporations show. I'm your host, Pierre Rochard, and today I'm honored to be joined with Eric Semler from Semler Scientific. Eric, how are you?
Great. It's great to be here.
So, Eric, I'd really love to hear your Bitcoin journey and where that started out at, and then we'll work all the way to your today's announcement that Semler has acquired an extra 185 Bitcoin. So, congratulations on that.
Thank you. I'm excited about it. Well, it all started for me, I think, back in 2012. I was on a investor trip. I was working as a hedge fund manager, running my hedge fund called TCS Capital. It was a long short fund and focused on technology and media. And I was part of an investor group that went to visit Wences Casares in his office when he was just starting out. I think it was called Rivet Capital. And pretty blown away by his enthusiasm and his, passion to be a Bitcoin guy, and didn't really understand it fully. That was my first exposure. And then as the years passed, I think by like 2017, I finally purchased Bitcoin, but was never really a hardcore Bitcoin maximalist until recently, with the institutionalization wave. That really was the tipping point for me, where with the ETFs and BlackRock and just the overall institutionalization of Bitcoin for corporations, what Michael Saylor was doing, all of that stuff really was just a catalyst for a very high conviction in Bitcoin for me.
It's really interesting. So I've heard Wences's name come up a number of times in conversation with folks, especially from Silicon Valley, in terms of him being almost patient zero there of orange pilling lots of people in the valley. But I think that he's not as loud on Twitter, perhaps, and so a lot of people in the Bitcoin community aren't familiar with just how much impact Wences has had behind the scenes, and also in kind of driving forward the VC ecosystem around Bitcoin.
It's interesting that I hadn't seen him, and I don't think he even knew who I was, over the years. Like we didn't have a relationship. I just had met him on that investor trip, and I didn't even recognize him. But last week in Las Vegas, I was at a cocktail reception, and I we started talking, and I explained to him how, he was the guy that really first exposed me to Bitcoin. And we spoke for about a half hour. It's just a terrific guy. We were able to really connect, and it was a very personal conversation. And I do think that he has taken a lower profile, and good for him. He deserves it. He can do whatever he wants. He's earned it.
Yeah, absolutely. I had a chance to be on a panel with him at JP Morgan in 2018, perhaps.
Really.
And when I walked into the room and saw him, I was almost like surprised of, oh, you're doing a public event. This is great because he's legendary with his early support of Bitcoin and building up Zappo Bank as well. So you mentioned you used to run, or you still do run a hedge fund, long short strategy.
Yeah, it's called a family office now,
Okay.
but I started TCS Capital. Those are my wife's initials in, in 2001, and which was a tough time to start a hedge fund back then, but I ended up doing well in those tough years, was able to raise a decent amount of capital and to perform well. We were about 4 billion under management at our peak, and we focused on technology and media and communications. And I did that for probably about 16 years. And then at that point, I decided to become a family office. But my strategy was always, I was always just very interested in kind of contrarian ideas or things that were not well followed. So I had kind of this natural inclination to be interested in Bitcoin. I guess it's kind of part of my MO. I'm an outside the box thinker when it comes to stocks and investment concepts. Hopefully in everything I do, but I've
Yeah.
always been kind of attracted to things that other people weren't so excited about. For me, that's the opportunity when something is kind of out of favor and you can get it right in your in your investment. You can make much higher returns than you would kind of following the herd.
And were you watching macro, or were you really focused on relative value plays as part of the long short strategy?
Very much single stock, long, short. Uh, not a wasn't really that focused on the macro. There are times when you have to be, even as an individual stock picker, like especially these days. The market has become much more macro driven for everyone. And so there we've all kind of had to become better at the macro. It's had such an impact influence on individual stocks.
And now with Bitcoin, I think that Bitcoin has grown into a macro asset itself. Would you characterize it that way now at a $2 trillion market cap?
For sure. Yeah, it definitely has. And it's made me more of a macro oriented investor too, because when you first start studying it, you obviously have to think about the what it means globally for as an asset class. And it's so different from anything I typically have looked at, where there's cash flows and earnings and conference calls and meetings with management. That's just that's been my life, in my professional life. But this is totally different.
Yeah, and when you were investing in technology, what did you make of kind of the open source movement and Linux and that whole ecosystem? Did you have a view on that?
Yeah, it was actually not an area that I spent a lot of time investing in. In my early days, I was really, around those times, I was very focused on the media space, media and telecommunications, and less so on technology per se. My background before going into the investment business was as a journalist. I worked at the New York Times. I worked for a Russian newspaper called Moscow News. And so I wasn't really a financial guy until I had gone to business school and worked in some financial firms before starting my own fund. And my background was really more about media, wanting to follow the media space and telecom. And I took it came at it very differently from typical investors. I was a journalist. I took like a journalistic approach. So my strengths are as a journalist, like interviewing people, coming up with a thesis, really testing it, doing a lot of research, investigation, and trying to stay neutral, trying to be very objective when I look at something. And there weren't a lot of investors oriented that way, and that helped me differentiate myself and my performance. And so I was just naturally interested in the media business, and that helped me. The media business at that time was dynamic, and it was also consolidating. Which also, when sectors consolidate, there's a lot of opportunity to make a lot of money, like through M&A transactions and just a lot of movement in the checkerboard, and it's a lot of strategic thinking, a lot of it's not like so much are they going to beat the quarter, or what were the numbers like this week or this month. It was very much kind of thinking bigger picture strategically about how the chess pieces were going to go, and that's how I was able to succeed in those early years, and less so in technology. I'd say that kind of came later, more in the middle of my career. And I got focused more on kind of on digital media. So like, Google and Netflix and things like that.
Yeah, that makes a lot of sense. Now, given that media background and starting out at the New York Times, over the years, what have you made of the media coverage on Bitcoin? And they seem to have maybe not have had as much of a objective view of it. It seems like quite often, whether it's the New York Times or the Wall Street Journal or a lot of the other mainstream publications,
Yeah,
they've
I'd say the
had a
Financial
negative bent.
Times. Financial Times been very
Yeah.
negative, a lot of negative editorials. Yeah, I don't think it's still really covered very well. It's hard to think of journalists at those kind of traditional media institutions that are really covering it well. I noticed it firsthand when the coverage of Bitcoin Treasury companies. They call us copycats. And
Yeah.
it's very derogatory. They're really nice when they interview you, but then when they write the story, it's always kind of got a negative bent to it. Like, these guys are just following a fad or a trend, and so there's a kind of a negative bias toward it. And I think about that a lot because I was a journalist, and I always try to be very balanced, and when I wrote a story, and try to really get both perspectives and keep my personal views out of it. But I think it's very hard for journalists to do that now. And I think there's probably more pressure to put your opinion in an article, interestingly, which I'm really against. I'm very much into objectivity and neutrality in that realm, like in the journalistic realm when you're writing a news story.
Right. It's one thing to have an opinion. It's another to be reporting the facts. And I saw it firsthand. I was previously at Riot Platforms, a Bitcoin mining company, and we had a beautiful hit piece written by the New York Times on how much pollution is coming out of these computers.
Yeah.
Um, but I do also think that it has created a unique opportunity for platforms like Bitcoin Magazine to emerge and to really get a
Right.
big readership because now they're able to provide the other side of the story.
Yeah, and I think the podcast world too, which where I get a lot of my information from on Bitcoin, just what Michael Saylor's done with podcasts has been so valuable. And I think that is where that's where the audience is headed, right? And I think that it's balanced it out a lot. So you'll see your occasional negative story in the New York Times or Financial Times, but then it's so overwhelmed by all this very informative, more balanced kind of information that you get on in through podcasts particularly.
Completely agree. So let's bring it to Semler. How did you go from operating a hedge fund to starting a medical company?
Well, I did start the medical company. I actually, it's an interesting story because toward the end of my time running my hedge fund, TCS, I became much more of an activist. And I call it a reluctivist. I didn't enjoy being an activist because that means you kind of have to be nasty and go after management teams and tell them how bad they're doing, and you're demanding a board seat or a proxy fight. And that's not my style. Like, I don't love being controversial or antagonistic. I just want to own stocks kind of passively and hope that they, work for me. And but they're just I do have a very long-term perspective. And so there were stocks that I would just, I'd be the last guy standing. And I like to say I went to Dartmouth, and our motto is Vox Clamantis in Deserto, which means lone voice crying in the wilderness. And that's how I felt in a lot of stocks that I'd own. I just wouldn't give up. There were stocks like Angie's List or Move.com or GeekNet. These companies are just like, I literally was the largest shareholder institutionally, and everybody else had just thrown in the towel. And at that point, you're just like, and you're now on like CEO number 3 or 4 since you've owned the stock, and nobody there really knows what happened before except you. And so I just decided at some point I need to kind of, take the bull by the horns and try to create change to help shareholders. And I started doing that. I started with a Chinese company and it really worked out well. It was trading like below its cash value, and I was shocked because it was based in China, and I was actually able to convince the board to when they decided to take it private, to pay a much higher price for it. And then I started doing that with some other companies, and eventually I went on the boards of some public companies and affected change. And I really enjoyed that. I realized that like this is a great way to create value. I have good skills at kind of interacting with people on boards and trying to talk them into my perspective and doing it in a friendly way. And it really was working for me. It was lucrative and it was effective. So as toward the end of my career, I just started doing much more of this and realized, I probably should just be a family office. It's a little more difficult when you're interested in like one stock and you're spending all your time on it. You're supposed to be running a portfolio. It's easier if you're kind of just doing it with your own capital. So I just started doing that on my own. And then Semler was a company that had been around since I think 2014, the public markets, but I was a seed investor. I was like a founding investor in the company back in 2007. So my father, who's a cardiologist in Oregon, started the company, but he needed capital, and I was funding him with another one or two investors. At that time, I ended up owning, when it went public, about 10% of the company. And really wasn't, that paying that close attention to it because it was my dad's business, and I just wanted to help him out and see him do well. But I wasn't a healthcare investor, and it was a healthcare company. So I wasn't. I was pretty happy with the returns from like 2016 to 2021. Semler was up 13,500%. It went up 136x. Had this incredible medical device and software product that was just super successful and high margin, and there was no reason to really get activists or anything like that. But then the winds kind of started to change. There were headwinds, and their business was affected by some regulatory changes at CMS, which oversees the Medicare Advantage program, and that took the stock down a lot. And I decided, to get involved in like 2 years ago, 2023. And so I actually did an activist campaign. A reluctantly getting involved, and went to the board and said I'd like some board seats. I'd like to reformulate the board. I was a large shareholder. I was coming in with another large shareholder, and they agreed to a settlement. And I went on the board. I became chairman. I reformulated it with where there was 4 board members, and 3 of us owned over 30% collectively of the company. And my father was no longer involved. He's not a shareholder or anything that I'm aware of. So it happened to have my name on it, but it wasn't like something that I had a long history with. And so in 2023, I came into the company, and we were in a situation where our stock was very depressed. We were trading at an extremely low valuation. We were generating good cash. We had about 40% of our market cap was in cash. So we had this opportunity to deploy cash, and I just assumed at that time, it would be through acquisitions, which we ended up not doing. Instead, we decided to buy Bitcoin.
Yeah. So, how did you jump from being bullish on Bitcoin on a personal level to seeing it as a corporate strategy?
It's a great question, really good question. I think I think Michael Saylor is the 2-word answer to that. I think that as a follower of the stock markets, and when you have a company as successful as MicroStrategy was in the stock market, you can't help but notice that. And if you're interested in Bitcoin like me, you're like a shareholder of that company, and you're like, wow. And then as a shareholder of the company, you pay close attention to it. You listen to every word Michael said because it was pretty valuable content and very instructive for me. And so it was just kind of like it really resonated for me, and it felt like I was looking in the mirror a little bit, where when I went on the board of Semler and I saw how much cash we had, and we couldn't find an acquisition, and I started thinking about what Michael Saylor's position was in 2020, in August of 2020, where he had a very similar financial profile to our company. And I was thinking, God, maybe we are MicroStrategy of 2024, 4 years later. Maybe we should consider what Michael Saylor did in August of 2020. And so I went to my board. I tried to educate them as much as I could about MicroStrategy and Bitcoin, and why it's worked for MicroStrategy. And I didn't know Michael Saylor at that point. But our board was on board with it. They really thought it would be a really smart move, given how successful Bitcoin is. And again, with institutional prospects, we thought it made sense. And it stunned me that no one had tried to do this except for Michael Saylor at that point. I mean, he'd been at it for 4 years, and 3 or 4, maybe it was 3 years at that point. And it stunned me, with a guy who had that much success with his company and his stock, and still no followers. And so, when we announced it, we thought we were the first follower. I think Metaplanet beat us by a few weeks, But we basically were simultaneously coming out with this strategy in, opposite ends of the world. But it was kind of risky, it's a little bit anxious when we put out that press release on May 28th, 2024, almost exactly a year ago.
Wish you could access cash without selling your Bitcoin? Ledn is the global leader in Bitcoin-backed lending. They've issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. A Ledn loan is different. With custodied loans, collateral is not lent out to generate interest. No credit checks, funds in under 12 hours, with proof of reserves reports published every 6 months. Ledn gives Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at ledn.io.
Yeah, I can imagine. After Saylor announced in 2020, I was working at Kraken, and they asked me to on a webinar make a crazy prediction for 21, and I said half the S&P 500 would acquire Bitcoin. So
Wow.
that was probably my worst crazy prediction I've made. But it's been I heard the now CEO of Strategy Fong say that a major challenge is the board of directors, that you can have management alignment, but sometimes the board just can't get on board with it. No pun intended. So you mentioned you've had a lot of board experience. Do you think what are the kind of the structural or almost psychological, sociological reasons for what the barriers are at the board level?
Yeah. There's a lot of them. Most public company boards are full of retired people who are looking to get a quarterly check from the board or shares and not rock the boat. The goal is kind of stability, and so that kind of goes against the idea of doing something as radical as putting Bitcoin on your balance sheet. I think that is kind of antithetical to what most board members in America are setting out to do with their board roles. So that's difficult. And then I think on top of that is just Bitcoin's been volatile for the typical board member who doesn't understand Bitcoin and isn't convinced that it makes sense at all. Not just for corporate treasury. So there's just a kind of an ignorance, I think, toward that. There's an aversion to volatility. There's a sense of really wanting to maintain the status quo. And I think that those are huge barriers. So in a way, you need companies who have boards that have tight control, like ours did. Like our board had a lot of skin in the game. We owned a lot of stock. We were nimble that way. We were open to, we were open-minded. I know that's kind of a nebulous concept, but being open-minded and proactive are such important qualities of a board. You don't see that, too much. Like when Michael Saylor pitched Microsoft's board, did they seem open-minded? They just seemed dismissive, and so, you need that kind of mindset on a board to do this. So it's hard. It's just difficult to find that. It's not very common. Just as a side note, I meet with public companies all the time, just because I still invest a lot in non-Bitcoin oriented stocks in technology and media. I had a company in my office yesterday, pretty big casino company. I won't mention their name, probably $8 billion market cap, great cash flowing business, very high margins, only growing 1 or 2%, but very steady, huge free cash flow. And I was stunned because they seemed like the kind of company that would never do this. They very old fashioned, kind of family controlled, but public. Been in the family for 50 years, probably wouldn't want to ever kind of destroy the value they've created. And the CFO of the company, who I've known a long time, who's basically kind of the face of the company, came into my office, and I was really surprised because I thought we were going to talk about his company, but he ended up spending most of the time asking me about Semler's Bitcoin treasury strategy. And he didn't know anything about Bitcoin. And he just kept asking me, like, how do I learn more? What should I do? And, can you send me something? And I was stunned. I mean, we're talking about a very old fashioned mindset company. And they he suggested they might be open to it because they've been buying back. They bought back billions of dollars of stock. Hasn't really made any money doing that. It's kind of flat on those purchases. Their stock's been relatively flat. It hasn't been a poor performer, but it hasn't really gone up a lot. And they don't really know what to do. They're generating a lot of cash. There's nothing really to buy. The casino business is just kind of a very mature business, but a great cash flowing business. It's a perfect candidate for this. And I think he understands that, but just needs to understand why Bitcoin is the answer and, to his balance sheet questions. And so, it's kind of an interesting question for me in that meeting. When he said to me, what should I read? What should I do? And I was like, my head was spinning, I was just like, there's so much I read and listened to, like, where do you start? So I think my first reaction was read the Bitcoin Standard. And I'd love to hear what you think, Pierre, because I'm relatively new to this, but I would love your suggestions for people like that. I thought I'd say, read the Bitcoin Standard, read the first 7 chapters kind of quickly, and then really focus on chapter 8. And then, and then that will help you. If that doesn't really get you to want to know more, then you're probably not going to go any further. But then I would probably suggest a lot of Michael Saylor podcasts, but there must be so much, that.
Yeah, I definitely think the Bitcoin Standard is up there on the list, and has now sold millions of copies worldwide in every different language. So it is part of the Bitcoin canon. Um, we've got this podcast, Bitcoin for Corporations
Yeah,
show now. So
definitely.
I definitely think that this is a huge opportunity for developing the content for that audience, because we have lots of content that I think is geared towards, for lack of a better word, retail, or just the general public.
Yeah.
And adapting that to the worldview of corporations and balance sheets and accounting, that is a bridge that is being built, and that Sailor and Bitcoin Magazine have done an excellent job of putting that together. And we're only at the beginning. As you point out, there's lots of businesses like this casino business that
Yeah.
they're starting to understand that something's wrong here, and that to create shareholder value, they have to adapt and think outside the box on Bitcoin.
Yeah, for sure.
You started in last year, is that correct?
Yeah, about exactly a year ago, we announced the strategy.
And did you have friends within the management team, the CFO, that was also orange pilled, or were you, as you alluded to, kind of on your own and developing the education?
I was on my own, developing it myself. Yeah, I mean, we were fortunate to have very open-minded people who were willing to listen, both on the senior management and on the board. And so I honestly, I wasn't sure if it was just like, I probably started off by saying I have a really off the wall idea.
Yeah.
Don't, you guys are going to think I'm nuts, but, and I actually did write that. I think you guys are going to think I'm nuts, but I want to run something by you, because we had been spending so much time together looking at, companies to buy in the medical space, mostly private. And there's just such a lack of transparency and an uncertainty when you go down that path, and then the prices people ask for are outrageous, and you're not in their businesses for the most part. We don't have a lot of competition, if any, in our space. So we were looking at adjacencies, and that when you get into things that you're not in the business of, it's really like there's a lot of risk and uncertainty to that. So it got very frustrating. We spent so much time, like we, do due diligence. We travel to these companies, meet their founders and their CEOs, and it was just kind of like running into a wall. And I felt like at some point we were going to compromise. Like I thought,
Yeah.
like let's just buy this thing. We got all this cash and our business is under pressure. We need something else. And, let's just kind of settle, for something that's not, the perfect acquisition, or not even like a clearly outstanding acquisition. We also looked at things like we're buying the senior debt of some distressed companies, and it was just so messy. It was like there was a lot of hoops to go through, and seemed very complicated. So like it was just getting harder and harder to find a great deal. And that's why, I kind of turned to Bitcoin, because it just was so much clearer and transparent and straightforward, yet, so foreign to my colleagues at Semler. Yeah.
Do you think the high valuations are being driven by, is it private equity that's driving them up, or are there other factors?
Yeah, it's private equity. There's competition. A lot of these things are like auctions, so like there's other potential bidders. I think there's this mindset of entrepreneurs, founders, who just think their business is worth obviously a lot more than it really is, because it's their baby. So like that's difficult for people to kind of relinquish. And then there's a lot of this kind of, well, yeah, we're kind of flat this year, but next year we're going to be up 60%.
Right.
You're like, oh, we got this new thing, it's good, we're gonna be up a lot, and you're just like, I'm gonna buy into that. You've been flat for 4 years, and now all of a sudden the business is taking off. So it's things like that, and you're just, Bitcoin is so much better than all of that.
And how was it after? So first, the conversation with the board. How long did it take to kind of socialize the idea and to get that buy-in? What was that process like?
Yeah, I don't remember exactly how long, but it was definitely like several weeks, probably quicker than most processes at the board level, because there were only four of us, including me, um, and and uh, and we were very interactive. We have a really close relationships in terms of, like, we had nobody. We work 24/7. We're not nine to fivers, and and we text a lot. We do a lot of communication. It's almost like, we work at the company. We're just, we
Yeah.
care so much about it. It's a huge investment for all of us collectively. So we put a lot of time and concern into it. And so we probably moved quicker. But I would say it was probably a few weeks of, listening to podcasts. I was and sending articles and talking to people. There were some really interesting people that were advising us to some degree, that I pulled in for meetings, for Zooms and things like that, who were very knowledgeable on Bitcoin. So yeah, that was kind of the process. It was just an educational process.
And so, would that be your advice to a CEO who's really trying to get their board to buy into Bitcoin, to bring in Bitcoin experts and just over communicate, what current events and what's going on in the Bitcoin space?
Yeah, I think so. I think if you can get Michael Saylor to show up, we didn't have that, but that would probably be that would be your killer killer app for that one. But I think that you definitely need very persuasive people who can explain it in layman's terms, and for people that really don't understand it or don't believe in it. I think that the examples are important. I think MicroStrategy's success, Metaplanet's success are really powerful for companies to look at. I think that's part of what is making, like, the CFO of this casino company interested. Like, he doesn't necessarily know those companies, but he knows that there are companies out there that have been successful. He knows Bitcoin's been successful. But then you have this, just, the government in the US being so supportive of it, I think has to make every financial, player think, wow, am I missing out on something really important here? And then you hear the drumbeat of the deficit. I mean, it's really loud these days, right? And there's this sense that the cannot be kicked down the road much further. I always, when I started out, was always, this issue was always kind of overhanging, the deficit and the
Yeah.
debt. but it was never like, it always just felt like, we're going to have a Fed chair who's going to kick the can down the road. And I never, when you asked me earlier, are you a macro investor? I was very cognizant of the macro, but I always just felt like we were going to get bailed out.
Mm.
And I think, in fact, those create buying opportunities when you have the Fed step in or reverse, its policy to be more dovish. Like, all of that is just really fantastic stuff that I never really worried about when I was picking stocks, because I always felt like the Fed had my back, and I think we're just in such a different time now where the Fed doesn't have a lot of flexibility. That some of this is just, beyond our control. It's, the bond vigilantes or whatever, it's gotten too massive, and our debt's being downgraded, and it's not really even about the US, it's the whole world. So, yeah, I went off on a tangent there,
No,
but
yeah, but painting that picture for the more conservative board members, I think would help to add a sense
yes,
of urgency that if they want the company to survive and thrive through these times, that they need, you can think of it as an insurance policy, right? We're taking on less risk by taking
yeah.
a Bitcoin position.
Yeah, and I think also this idea of, what if you are a company with a lot of cash on your balance sheet, um, buying back stock is not so obviously creative, right? Like, this company that I was talking about earlier, that they haven't really done well with their buyback. It's been fine, but it's not it's not the kind of return they were looking for. There's a lot of companies who have a lot of cash, and if they buy back stock, they just make their stock thinner, less traded, and it just becomes more of a zombie, right? So that you're reducing the float. And that's not necessarily a smart thing to do if you're trying to attract bigger and more larger investors. And then, dividends are not tax efficient; they're kind of out of favor. And I think buybacks are becoming less, in favor too. And so then it just leaves you with kind of this, we got to do an acquisition, and acquisitions are dicey, as I was saying earlier. And so now now you're sitting on this cash that's really not earning a justifiable return. And so now you got to think about stuff like Bitcoin, I think, or gold or whatever. But it's narrowing. The options are really narrowing for public companies and their balance sheets.
So I'm focusing in on this because you mentioned you've had a lot of board experience. So I'm also curious. I heard somebody suggest that, hey, look, if the board is not open, or if there's one board member who is essentially exercising a veto power, you need to ask them to resign. And obviously, I know that's not the situation at Semler, but given your experience, what are the governance limitations for making a move like that? In my mind, I thought, well, that might send a really negative signal to the market.
It does. I mean, if I'm an investor in a public company and a board member resigns, I'm nervous. Like, why would that happen? There's something really bad happening at this company, and somebody objects to it, and they're leaving. That's a red flag. Um, but in this case, I mean, they can't say, "Oh, I'm leaving because I'm against their Bitcoin Treasury strategy." I guess if they said that, "I'm leaving because I'm against their Bitcoin Treasury," I might be, okay, good. I'm glad you
Yeah,
left. But I don't think they're going to be that specific.
right.
But maybe it'll come out in the wash. So I think that I think that's an interesting dynamic. You rarely see that. You rarely see board members usually leave voluntarily. If they leave, they don't leave because they were forced out. They leave because of guys like me who are doing an activist campaign against them and are trying to do, get board seats, proxy, or settlement or something. And that is a very active market. But that's really the only way this stuff really happens. And usually there's a settlement, there's a compromise of some sort. You don't always end up with board seats if you want to push companies to do a Bitcoin Treasury strategy. You can. I would think that like what Matt Cole's doing at Strive makes sense. Like he's probably going to make a lot of headway finding companies, zombie companies that see this as a way to kind of to get higher returns and electrify the company. I think that is probably a good, not a bad strategy, because I think boards, more and more boards, especially smaller companies, are going to be receptive to that because they're kind of stuck in, they're in an impasse.
Right. That makes sense. And in a lot of ways, it's like if you had a board member at Apple who said that, phones cause cancer and we need to stop doing the iPhone. It's like, well, you're really at the wrong company here.
Yeah, for sure.
You can have
Yeah,
that opinion,
yeah.
but it's not.
Yeah.
Uh,
There's such a group think, and there's very little dissension on the boards that I've been on, previously. Like there's it's hard because I've been on a few boards where I am kind of the lone dissenter. Like I'm there, I got on the board, they're pissed at me because I caused a lot. I kind of embarrassed them publicly by saying they're doing the wrong things and they need to give me a board seat. And I've gone on the board in those situations, and everybody just looks at you and you show up for the first board meeting like you've got a disease, and some won't even talk to you. But I like those situations as a challenge, and I was able to overcome that by kind of trying to show people that I'm actually just intellectually disagree with them. It's not personal. And and that if you really want the stock to go up, I gotta believe you do, then you should really consider what I'm saying. And in a lot of cases, for me in those days, it was really, you need to sell the company. Usually the answer is a sale. When you're struggling and you have strategic value and the market's not giving it to you. So it's hard to convince people to do that. Why would a board member want to sell when they're retired and they're getting a check, right? Why would you want this to come to an end? But and you don't own a ton of stock, so like there's no incentive to do that. But that was kind of my pet peeve was, these guys were depriving shareholders of value by not, pursuing strategic alternatives.
and for the board members, or even for others who look at what Sailor's doing or did with strategy, the tender offer, do you think that is going to make sense for other companies, or was that just because he was the first one doing it? And
Yeah, we thought a lot about that because we were nervous that, our healthcare shareholders would be upset about this pivot, and we weren't sure how they would react. But then you have this dilemma of you don't really want to announce it before you actually buy the Bitcoin. Like, you're kind of negotiating against yourself a little bit. It's counterproductive. So that was a very difficult decision to make, but we decided to just make the announcement, and it ended up, the stock quadrupled basically subsequently to that, almost. So it ended up being, very positive for everyone who was an investor at the time and subsequent to that. But I think now that we've had so many announcements, I don't think you need to do that. I don't think you need to do, what Michael did. I think it was very noble of him to do that. But I think that it's probably kind of become common enough and popular enough to not have to do that. But I would commend a board for doing it if that's how they would prefer to do it. That would be, I would understand why they would want to do that.
right, because we hear the argument sometimes of, well, the reason why you should do a buyback or give the cash back to the investors is to let them make an investment decision with it, and if they want to go buy Bitcoin, they should do that. How do you think through that dynamic, and what do you think the fallacy is there?
Well, I think that the reason you buy back stock if you're a company is because you think that your stock has a lot of upside and that you're trying to generate a very good IRR on your cash. And that's some people see that as a return of capital too. But I look at it more as we're taking our cash to buy back our stock because we believe that in a year and 2 years it's going to be, whatever, 30% higher or 50% higher. And that's why you do that. You don't buy back your stock because it's down a lot, or because, there's a huge buyer in the market, a huge seller in the market, and you need to like sop it up. I don't think that's why you do it. I think that if you return capital, I think the best way to do that really is through dividends, or a special dividend is often a good move. You don't see that too often. Um, but I think of buybacks more as an investment. I don't think of them as a return of capital so much.
Yeah, that's a very rational way to look at it. That you are buying
Yeah.
the stock, and
Yeah. And
it just happens to be your
I think
own.
that's how Warren Buffett really
Yeah.
views it. And I think that's why he was so good at it. He's the king of buybacks. And I think, he didn't buy back any stock, I think, right, in his last quarter. So I mean, that's always a signal, right, that when he's not doing it. But he's a master of buying back stock, but there aren't that many who are really as good at that as he has been.
Yeah, and now after the board is bullish on Bitcoin, maybe one of the questions that comes up is, well, hasn't Saylor already done this? So it kind of flips it on its head of, well, because others have done it, really, is there a place for us in the capital markets to
Yeah.
also be doing this? And what's your reaction to that perspective?
Well, that's a good question too. I think that I think that it makes sense for you have to think about it as your alternative. So you have this cash on your balance sheet. What would you rather it be in Bitcoin or treasuries or whatever? And so I think you start there and you say, well, I'd rather my cash was earning the return of Bitcoin over treasuries. And so I think that's a good starting point. So that doesn't necessarily mean you have to be on the Bitcoin standard, or it's your primary reserve asset, but it's probably just a good thing to have Bitcoin in your treasury. That's a good starting point, and maybe
Like
that's where
Tesla?
yeah. Go ahead. I'm
Yeah.
sorry.
Oh, I was
No,
just mentioning it. Tesla is a name that is just,
right.
doing that. Yeah.
Yeah, exactly. Or GameStop might be doing that. It's hard to tell what they're doing, but like from a maybe that's just their plan. Let's get our feet wet. Let's we think it's a good asset with a lot of upside, and so maybe it's commodity. We can have it on our balance sheet. So maybe that's the best place to start. And then there's all these different versions of this you can do. You can use all of your cash, portion of it, and I think a lot of it is just what you think that will help you do in terms of creating shareholder value. And if the space gets super crowded, and then the MNAVs trade to lower levels, and maybe that's a time to reassess, or maybe it's not. Maybe MNAVs will expand and decline over time. Maybe there are ways that you can buy Bitcoin that are more accretive, perhaps through operating cash flow. A lot of the companies that are doing this are not generating operating cash flow. And so it's not maybe as accretive to do as it was for Michael. But I think that it just really depends on the company you are. And I see a lot of companies doing this, but I think the best ones to do this are companies that generate cash flow, that have scale, that have the opportunity, scale in Bitcoin, that have the opportunity to access debt and preferred. I think that's really not going to be every company. I think there's just going to be a handful, maybe more than that are able to do that in a long-term, meaningful way. We'd like to be one of those companies. We have just a very high conviction that Bitcoin is, digital real estate, the way Michael's talked about it. We really buy into that. So we want to own a lot of digital real estate. And we think it's really important to do that now, because Bitcoin, we believe, is incredibly undervalued relative to gold, and it's worth more than gold, we believe. So we should be aggressively purchasing Bitcoin on that thesis. That's how we look at it.
Yeah, that makes a lot of sense. And do you also have a view on the convergence between essentially the cost of capital, whether it's debt or equity, and Bitcoin's long-term CAGR, right? That shouldn't those two, we need Bitcoin treasury companies to help those two numbers converge.
Yes.
And that there's room for lots of companies in that, given how wide they are today.
Yeah, absolutely. I think that's a great argument. I do believe there's a lot of room, even though we've had this flurry of announcements, and a lot of it is still kind of being digested by the market. Like there's been a lot of volatility around it. Some of the reactions have been very negative. But I think it's a really positive trend and movement. And I think the market, in the longer term will sort this out, and it will reward companies for doing this for the reason you just said. Like it's a much better, higher return use of your balance sheet. But I think that you have to really work hard to figure out how to do this accretively, right? Like it takes time to crack the convertible markets and the preferred markets, and using your cash flow to buy Bitcoin, which is obviously super accretive, I think. So it's probably more complex than it looks right now, because so many companies are announcing these things, and it looks too easy in a way to announce a Bitcoin treasury strategy. I think that some of the fallout we've had from that, and some of the the lack of you don't have the same reaction sometimes that you had when we announced it, or when when Nakamoto announced it, or Cantor and others. But I think that doesn't really matter. I think you got to measure it over a longer term, and I think that it makes a ton of sense still for many more companies to do this. And I
Right.
think it's great for Bitcoin. I just think that it's going to
Yeah.
create enormous demand.
That I agree on, and if we look at even the history of MSTR, they had a MNAV that was below 1x during the previous bear market, and I think that nobody was acclaiming them as a success story until the past 6 months, essentially after 5 years of executing on this strategy. So I agree with you that this has to be looked at long term. We can't look at it quarter to quarter, even, or month to
Yeah.
month.
Yeah. And I remember when the ETFs were coming out, I was talking to some of the sell side crypto analysts at some of the firms who cover Bitcoin. And a few of them were really negative on MicroStrategy,
Hmm.
on the ETF coming out, because I can buy the ETF. MicroStrategy is trading a premium to Bitcoin, so it should go down a lot. I wouldn't own that, you know. And look, that was completely wrong, right? And that premium has sustained itself. It's bounced around, but I think that there's real justification for that. I think you can argue about what is that, what justifies the premium, but to me it's very logical why MicroStrategy trades a premium. But it's interesting that once people thought we'd have this ETF, that there would be no reason to own MicroStrategy anymore, and that was completely wrong.
So I am curious to hear, given all of your experience in capital markets, what you see as the structural justifications for the premium, whether it's for MSTR or Semler, or any kind of Bitcoin treasury company,
Yeah,
what the fundamental drivers are from first principles.
I think there's some very concrete ones that just you can't really argue over. One is just this concept of you're a big mutual fund. You can't buy Bitcoin. You can't buy the ETFs. You have to buy a stock if you want exposure to Bitcoin. There just aren't that many big institutional portfolio managers who want to do that. I mean, there's been the guys who've done it have just been, superstars in their world. And so they're definitely, you talk about all the Bitcoin treasury strategies companies that are popping up. How about all the fund managers that need to pop up that haven't been buying Bitcoin, who've been in denial? And now they're like, God, I got to get some Bitcoin in my portfolio.
Yeah.
There just aren't that many pieces of paper. Even with all the companies that have been announced, you got to be a $5 or $6 billion market cap to be in kind of a major fund, like a large fund. I mean, it can vary, but if you want people to buy your stock and size in their mutual fund, you've got to be, you have reasonable scale. And truthfully, there just aren't that many equity players, and it's pieces of paper in the stock market that have that market cap, and so there's a scarcity. There's just a scarcity value for it. Being an equity play on Bitcoin, there's demand for in the stock markets from the buy side, the mutual funds and institutional funds. So that's just a huge amount of demand right there. So that scarcity value justifies some premium, I believe. Then the other part of it is just leverage, right? I mean, you could borrow money to buy IBIT, but also we're a levered company. I think we're the most levered Bitcoin treasury, or we were until recently. We have a convert that is about 20% of our market cap in Bitcoin holdings. We're not super levered, but we do have more leverage than most, and so that might justify a premium. And I think that I think that the volatility of our stock, we're at 125%. MicroStrategy has high volatility. Metaplanet does too. That volatility creates financing opportunities, like especially in the convert markets. So in the convert markets, fund managers that are trying to monetize volatility by shorting and buying and trading basically these converts, and I think that that also justifies the volatility of the premium. And then I think there's more of an intangible thing. It's just more your relationship with the Bitcoin community and the brand, kind of your brand equity with the Bitcoin community, which is so important because your shareholder base is really that's the foundation of your shareholder base for the most part. We have some great institutional shareholders, but we also have a lot of individual Bitcoiners who own our stock, and I think that they are a really important component of this. And they want to hear more than just, they want to hear buys. They want to hear that you bought Bitcoin accretively, but they also want to know that you're fully committed to what you're doing, that you're not just, kind of a fly by night. And I think there's real value in that. I don't know how to measure that, but that definitely can translate into some premium value. And I think that's really happened really well for Michael. I think especially for Metaplanet. I think Metaplanet's done a phenomenal job in that department. And I think being in Japan also just a fantastic angle to it. But I think that that's something that we would love to, enhance with our story. I feel like we're trying to become a bigger voice in the Bitcoin community. But at the same time, we should benefit from being, one of the rare, larger public equities in the space, and we own $500 million of Bitcoin, and we're continuing to buy it, and that we're levered. So I think all of those aspects can justify the premium.
And how do you think about the risk management on the leverage with the converts? What's your thought process on that?
I feel good about that because it's 5-year durable debt. There's no 3-year put provision back to us like a lot of these converts have. So we have when we did in February, we have 5.5 years durable long-term debt to either refinance or to pay back. So when we have plenty of coverage in our Bitcoin holdings for that, it's $100 million, and we own close to 500 million. So we're pretty covered on that basis. And then I think that being 20% or so of our market cap or our Bitcoin holdings is not is kind of a reasonable level. I think up to 30% is probably kind of our comfort zone.
Is that based on historical drawdowns for Bitcoin, or are there other factors that go into thinking about what the right leverage is?
Mm-hmm. Yeah, it's kind of a combination of things. Also, I'm also just someone who's, closely followed leverage in companies over the years and just feeling kind of what's manageable. And I think also just about kind of the kind of cash flow that we've created in the past as a company. Our EBITDA has declined a lot since we started this journey. But we do have some products in the pipeline that we're hopeful will get us back, someday to where we were, and nothing like immediately, but I think that we have the potential to. So I think about that too, over like a 5-year span, what kind of cash flow we could generate as a company.
Awesome. So the other big recent news item was your new board member, Natalie Brunell. So
Yeah.
congratulations on bringing her on board.
Thank you. Yeah, we're super excited. She's been so value added already. She just started, but she's unbelievably helpful in terms of just, introductions, her network, her experience, her conviction in Bitcoin. And she's really passionate about her company, and she really wants to succeed. And it's just fantastic to have someone like that. And that's an example, I think, of how, what I was saying earlier, kind of trying to build this relationship and connection with the Bitcoin community. I think she's a great start for us in that category. And I think she'll help us, improve our, our connection.
And you have that shared journalism background as well.
That's right. Yeah.
Yeah, that's great.
Yeah.
Do you
I always preferred print journalism to being in front of a camera, but yeah, definitely.
Yeah, are there other things that you feel like our audience should know about Semler before we sign off here at the top of the hour?
Well, one thing we didn't touch on
Yeah.
for boards is another, it was interesting when we first bought most of our Bitcoin, we took most of our cash. I mean, when we first bought Bitcoin with most of our cash back a year ago, Bitcoin went down a lot. And it really tested our conviction. It went down mainly because there was an announcement like right after we finished buying Bitcoin with like $60 million of cash that Mt. Gox was going to finally get distributed. And it put a lot of pressure on Bitcoin. I don't know if it went down 20 or 25% pretty quickly. And like we were saying earlier, I had these board members who didn't really have history with Bitcoin and volatility. So, for other companies that are considering this, you have to be ready for that. You have to be ready for that kind of conviction test. It can happen like right out of the gate. And for us, it was great because it made us really, think, is this really what we want to do? Do we want to buy more? We'd have to really, we use most of our cash already, but it was great because it reinforced kind of that conviction we had.
Yeah, that's really great to hear because even on a personal level, it hurts when it goes down after you
Oh
buy.
yeah.
But we can't time the market. I think
Right.
that's an
Yeah,
important lesson, and the volatility is a feature as well, as you pointed out.
for sure. Yeah.
Well, Eric, thank you so much for coming on the Bitcoin for Corporations show. I really enjoyed our conversation and hearing about your background and all of your thoughts in this space. We're excited to have you back on in the
Thank you.
future, and best of
Love
luck
to.
with Semler.
Love to. Thank you. And thank you for all the great questions.
All right. Thanks for joining us this week, and we'll see you next week on the Bitcoin for Corporations show. Don't forget to subscribe to the YouTube channel, and looking forward to hearing your comments.